Good morning. Give people a few minutes to give people a few minutes to get into here. Hopefully you guys are having a fun Father's Day. Or at least taking some time for yourselves for tomorrow. Nice. Post this to Twitter too, maybe. Cool. On your mentorship. What's a barbecue? Barbecue is when everything's been mitigated and our order flow flips, either bullish or bearish, and then takes out the subsequent highs or lows, which we're expecting to be very quick because there's no speed bumps left. We typically see one at least every backtesting session, so we'll see if we get one today. How many people we got in here? We ready to start? Time is at 8:07. Okay. Let's get ready to rock. You guys want to do NASDAQ or we want to do gold today? What are we feeling like? What do we want to do for Daddy's Day? One NQ? Okay. Cool. No surprise there. Let's go to, let's do something fun. Now, the problem is we've done back testing so much that going back all the way, there's probably one that's already been done. So why don't we do something at the end of the month here? Why don't we do something here? What are we looking at? 6 o'clock? 6 o'clock? Sure. Let's do that. And what this will do is rather than going all the way back to the beginning, we'll actually use a little bit to the left and practice some of the breakout groups material that you guys have been working on. Okay, so let's give ourselves a bit of a picture, and we'll use the left of the chart and the right of the chart. So what are we looking at here? We've got pretty big range. Looks like we've just broken out of it on our higher time frame. Cool. What have we got below us? We've got this higher time frame area responsible for taking us up into here. It looks like we've started a bit of a downtrend into it. We've actually tapped into it already. So let's mark out some pieces of information that we've got. We've got this here. We've got our larger zone here, right? And we've got a little bit of consolidation down here, it looks like, which we'll mark out as well, just in case. Down there. All right, so what have we got here? We've got this area here, which looks like we've tapped into, which was the whole point of this sweep down here. It looks like we flipped order flow. We're now beginning the process of pulling back into this consolidation. We want to see if this low gets held. Yeah, I would be interested to see what's going on with this low here because it's sitting right above a key point of interest. So we'll play this till about 8 o'clock. We'll see if we get a movement into our point of interest or not. We've got our midpoint here of that zone, which is definitely a point of interest. And then, yeah, I'm not anticipating much further. Why? Because this area was obviously clearly strong. We've now traded sideways, which is now broken the high here. If we're going to do a higher time frame pullback, we don't want this area to be liquidated for longs. Otherwise, we're looking short. So let's see what we get here. 7 o'clock. Yeah, there's 7 o'clock bar. Cool. So if we're looking to continue lower, where are we looking to continue lower from? Right? You guys thinking we're going to trade back up into this zone here? Are we long from here? What are you guys thinking so far? Everybody asleep. We've got a key point of interest here. So if we're going to continue short, you're looking for a pullback to see what happens with this area here. Right? Our higher time frame is definitely bullish. Okay, cool. Right? So this high currently is weak. We're definitely looking here. If this area gets broken, you're then looking for potential short up here. Right? And that's only based on the narrative that this is all inducement, which was responsible for tapping into this area here. We would look for a deeper mitigation, possibly. But right now, we're expecting this area should be grabbed, which is why this low is being looked at as weak in a sense. Okay, so there's our tap into this area. Notice how we're still front side, so we're not looking to short just yet. That's a nice sweep. Okay. Long or short? Or are we still waiting for higher prices? Right? So what we're looking at is potential short. Confirmation would be trading below here. Tapping back in and going. Why? We don't have anything swept down here. We've now swept the SNDR that's responsible for taking us below this low. Okay, so if you're short already, you need to be short from above. You're looking at this low. Failure to make a valid high is a major red flag for us. Okay, so we're happy. Possible move back in to this little consolidation area here. There it is. Okay, that's your confirmation, and now your stop's above this. Right, so you'd be looking for something similar to, right, this failure here. Let's be conservative. Let's say we take this, right, and now you're targeting here. Whoop. We still sitting? Or are you guys nervous? Yep. Right? Failure here took us higher. Certainly a dangerous bar. Right? We've now got our high here. So once this bar closes here, you're actually quite a bit happier. But you're nervous on that for sure. Hasn't invalidated the trade yet, but it tapped back into this consolidation and gave us a move. Bang. Right? This is where your narrative comes into play. Why are we going lower? We're not just trading based off of areas or price action. We have to have a reason of why we're going up or down, because that's going to move the market. Okay. So now we're tapping into here. We haven't taken that low yet. There goes that low. Okay. Bang. Right? So took this low, swept, immediately back into the zone. To where? Right? This area here that was responsible for putting in this high that went lower. How do we know this area was inducement again? Because it's sitting right above a key point of interest, right? Those that are in the refining group, you see this is the most important part of this zone here. Where are we? There we are. Okay, so tapping back in. Are we still thinking long? Are we thinking short? How do we know the area was inducement again? Or sorry, what's the definition of inducement again? Inducement is when higher time frame participants are getting all their orders, and then the market typically flushes out stops to complete an objective. Right? Now, if you're thinking long or short here, again, you're leaning heavily on your narrative. Right? Because depending on how you look at it, this could be a higher time frame wick, which is sending us higher to align with our higher time frame price action. Right? Or this is consolidation, tapping back in and leaving, depending on your narrative. Our narrative right now is that we're trading lower to this area, which means we're thinking short still. We'll move that. Yeah, I mean, essentially when you're talking sweep entries, you're looking at tapping into something specific, right? Inducement creates liquidity for the sweep. The sweep actually takes it. So they're not the same, but they're in the same area, right? This doesn't need to sweep here to be inducement, right? This creates liquidity below it because everybody that's long on a 5-minute or 15-minute chart or anything, where's their stop? It's right here. Where's the market trading to? Right here. So the idea is a sweep into it and then leave. And you see this happen pretty much every day on multiple time frames, actually. Cool. Tapping into an imbalance. That's not good. So if we're reading price action, we expected this imbalance to make a new high. We've now just closed below a bull bar, which means probably some indecisive action, and we'll see what this gives us. Or not. Did we take this? We took it. Right? So 68.25. By the way, not that I trade off of imbalances or anything, but when you're looking long for a new high to be put in, and you see something like this, that's your early warning sign to get gone. Right? Because now this is where your trade's invalid. The majority of messages that I get, it's a matter of knowing when to stay out of trouble. A majority of losses are a failure to understand that. Okay? Now, we've taken this low, cool. We've now swept, traded above. If we're going to be aggressive, this would be the area to look at with your target probably in here. Those of you that are conservative might wait for some sort of reaction here to know if we're going into here or not, because this is still our objective. Okay, price is stalling. We tapped into an imbalance again. Not what you want to see. Traded back into this consolidation and we're rejecting. So we're likely trading back up into here. There you go. Okay, so this fractal holds the weight of the next, I don't know, half an hour or so, maybe an hour of short-term price action. Why? This was the SNDR that broke here. So breaking it means at worst we're entering a bit of a range. You don't want to see this broken if we're going to tap back into it and leave. Right? We actually respected it here, traded back down, but we failed to break this low. So our idea of trading back into here in the interim is invalid. Right now we've taken this low and the market's telling us it wants to go higher. Okay? If you're long from here, this area that broke above the SNDR, very powerful, right? Your target is likely at a minimum here, but also very possibly we trade above these equal highs here, which would be my final target. But this is obviously a, we're not taking confirmation longs in here. We're just taking our little scalp, right? So tap back in, target here could be above this high itself, right? We're likely expecting some uncertain price action. Trade back into it again. And there's your first week high taken. Immediately back in. Cool. Whoop. Is it going to liquidate it? Or is it going to sweep it? What are you guys thinking? Long or short? Where's your stop? Below the manipulation. Cool. Cool. Nice round number, 1570. Okay. Okay. What's this area here? Right? It's an SNDR. So we just swept it and we took liquidity lower. We've already mitigated this consolidation here. We've already mitigated anything here. And what do we have? We've got a high here. This is actually, I think, a double top. Or sorry, equal highs. We've got a high here. We haven't touched here. We haven't touched here. And we actually haven't touched here yet either. So we haven't taken here, but price is telling us an unwillingness to go lower in a key point of interest. This is at 802 now. Right? So we're coming into climactic area for price and time. And as we talk about on stream, we follow manipulation, as some people I'm seeing in the chat are saying, right? So if you're long, your stop is below here, right? Ideally, you'd want to give yourself a little bit of room because you don't want to be shaken out, right? You don't want to see a closure. Oops. You don't want to see a closure below here. But if you're long from a decent position, say in, let's say here as an example, right? On the way back up after this sweep, give yourself a little bit of wiggle room, right? And at a minimum, you're targeting here. Okay. Not the best reaction. Probably looking, we just took some liquidity. I would probably be definitely below here now. I'm not too worried about how many points it is. We're looking at the price itself. Cool. Okay, now your stops break even. And you're looking for failure to get yourself out. Cool. Quite happy. Did we take that high? We did not. We taking this? Did we take it yet? 75. Exact high. Can it push it? Dangerous. So, you guys holding for that last tick? We've got equal highs here. This is a parabolic move. It's very possible that we trade into this imbalance, which puts in higher price action. We've got an area right above, right? So let's get rid of that. Let's say just have what's the most important area in this zone? It's this right here. The entire weight of that zone. Right? No surprise we tapped into it here. So your conservative stop should be below this candle, with the understanding that it could go higher. But, I mean, 12 and a quarter, fine by me, right? And we're out. Now, we have this wedge here, which essentially is a wall. Often what happens is we trade back down, we then take out the wall and continue lower, right? Because of the significant order flow that came on here. There it is. And immediately back in. This is an area where you're very aggressively looking at a short. Pair that with some narrative, and your stop is above the manipulation itself. Right? But we're not worried about that extra 4 points. Cool if we grab it with our understanding of price action. But the key is that we're not long from here riding this up and then allowing it to take 10 points back down for another move. If it gives us something in here, great. We'll do that. Lovely. Right? But why allow yourselves 10 points of a pullback? But we can just get back in. Okay, to be expected. Reaction from an SNDR sends us right back. We're looking at a minimum to trade back into this consolidation. But I would need to see something pretty specific, because this to me was just facilitating a movement back into here. And now you have a failure on both of those at a key point of interest. In my opinion, confirmation longs are done. So I would need to see something very specific from order flow here. Because as it stands right now, this is actually a weak low. Okay, trading back in. Oop. Oop. Okay, so short-term objective, 84.75 is the low of this candle. High of this candle is 84.75. We traded back down to our lower time frame objective, which was what? This range. Traded back up to where? Our lower time frame objective, which was this consolidation. If we get a failure in here, bye-bye. If we continue up, now we have a zone to continue higher. So we're looking at if. I teach price action. Candlesticks themselves give you a representation, but entry patterns and candlesticks are nothing without narrative. We need to know why the market's moving to where it's moving. Because otherwise you're looking at this going, well, this is tapping back into a consolidation area, and now we're trading higher. So depending on what your outlook is, you would actually look at, okay, well, this high is now weak, right? But our narrative is what we pair with market structure to give us our bias and our outlook. Right? So if I was looking at candlesticks, I would actually see this being a valid low in this lower time frame move, and I'd be looking for higher prices, which I'm not. Bang. Right back down to this area of significance. Your SNDR is actually right here. This was the fractal that sent you higher. In fairness, this is your predominant one. This up, down, up piece of price action there. Ooh. Anybody long? Let's get that off there. Clear some of this nonsense off. Okay. Okay. Right. So it's we like that into our area of interest. Right? Failure here would be a double bottom inside of a key point of interest. Right? This area is unmitigated right now. Okay? But what do we need to take into account? What do we have setting up here? Right? We've got this high, not taken. We've got this high here, not taken. We've got this high here, not taken. We've got this actually got swept, right? We've got a smaller, get rid of this now. Smaller version of this. Okay. And if we look at a higher time frame chart, like say a 15-minute, this would confirm that we've actually got highs here that haven't been taken yet. So it's feasible to suggest that we're actually going to start leaving some areas here, because what happens on one time frame happens on all time frames. So this might tap into here, which would then facilitate lower, or it could leave it. But right now, we're starting to come into about 8:30, which is a key area for London. And I'd be expecting a higher move at some point. That's right. If this, then that. Okay. Tapping into an imbalance. If you're long in here and you're up whatever that was, you're very nervous right now. Right? To the point where I would be gone even if I decided to ape in long here. You don't want to see this imbalance respected, period. And there you go. Right? What we got here? So that low is taken. Cool. We've got this area here. Failure to make a valid low. Bye-bye. Into our area. Anybody deciding to be ambitious? Are we just going to long any break? This is a confirmed low now. We're not getting a sweep. How about now? Right? Part of our struggle when we're starting to gain profitability is, what do we go through? We go through, okay, we've got strong bull bar, I want to go long. Strong bull bar, I want to go long. Strong bull bar, long, right? We want to be long on strong price action. And then what happens is we get wrecked. So then we decide to be contrarians because the market's not going to fool us. So we start longing every bear bar. Nope, it's got to go up. Sometimes we get paid. Sometimes we do not. Right? Part of the game is staying out of trouble. That means that not every single time we sweep something or trade below something protected that we just go long immediately. That gets you wrecked. Now, that being said, there's a strong possibility of this trading back up into this consolidation here before going lower, if we're going to go lower. Would we be looking to short from here? No. Why? We just tapped into a key point of interest. So we got a few people that are long, a few people sitting on their hands. Cool. You still long? Bang. Bang, bang, bang. Now, when we're back testing, what we don't have the benefit of seeing how violent this move was. That's one of the benefits that real time has, right? We could see this kind of go like this, bang, bang, right? And we're like, okay, I'm not touching this, period, right? Or we could see it kind of drop down, hang out for a bit, and then spike back up, trying to get us to get in on a firefly or something like that. But we can all agree that based off of what this looks like, we're spiking down, barely trading sideways, spiking down, barely trading sideways. And now we're getting another spike down. This is not anything that we want to be a part of right now. We've got this midpoint down here, but we have to liquidate this SNDR first, which would give us some other piece of information. Now, this area is not a 1 minute area, right? This candle represents an intermediate time frame SNDR that broke out of a higher time frame zone with its own structure, right? Now, these aren't 1 minute swings, right? This is just a higher time frame move over 13 minutes. So at a minimum, we want to see some sort of a change in order flow. That would give us a confirmation long. Otherwise, we're trying to catch the bottom of a falling knife. Now, what you guys can look at, you've got this candle here with a shaved top. Right? That's liquidity. As a good trader that I know. You guys know Unicode in chat. This is one of his things that he looks at. Right? We would look for a potential buy stop entry, which would give us a very strong movement out. And price ranges on a 1 minute chart. You talk about something like over here, Robert? Like this large range here or this? This is a point of interest. It's not a swing because it broke above here. Right? This is structure because we have a valid high here and a valid low. Right? We're looking at this was an area where a valid pullback occurred. This was the area of interest. Right? We can even refine it down a little bit rather than just this bar. Right? I don't consider it structure, similarly that I don't consider fractal structure, but they're lower time frame structure. If you zoom down on a 5-second chart, you'll see that there was actually a protected high and a protected low in there. How can you build and improve your narrative if you're not in deplorables? You're looking at objectives, right? So review your days without trying to find entries and just anticipate where you expect price to trade to and ask yourself higher level questions in your mind rather than, are we going up or down? It's where are we going up or down to? If we fail here, where are we going to first? Consolidation. Which failure here takes us to what? Consolidation. Failure here will continue the trend to where? Right? What's my 15-minute chart doing right now? What's my hourly chart doing? So the 1 minute chart facilitates to where the 15-minute wants to go. The 15-minute chart facilitates to where your higher time frame wants to go. Your 4 hour is doing what the daily and the weekly want to do, right? So on and so forth. They all flow together. And if you can understand that, then you're flying. Let's keep going with this. Bang. Right? So we're looking for something significant. We're getting nothing. And here's our area right here, 50.25. So in an ideal situation, we want to see some sort of inducement in here, drop through, trade higher, and then leave. That would be ideal, right? That gives us a change in order flow. We've taken out people. We would expect a very strong move to the upside. Let's see what we get, right? With the understanding that this is a higher time frame zone than the 1 minute, and excuse me. There we go. Beautiful. Not really the inducement I was looking for, but certainly a strong reaction from here. Okay. Okay. Ambitious long. You got like about a 2-point stop from the close of this candle. Probably get paid if we don't violate this candle right now. This is going higher in a very, very quickly. I don't use the 30-minute. I use my 1, 15, and 4 hour. And there you go. Okay. So first objective would have been this speed bump here. We're definitely looking at this consolidation. Beautiful. Absolutely beautiful. If we're going to go down, first off, are we expecting to go down or are we expecting to go flying to the moon? And by the way, this is where buy stop entries become very prevalent, right? Buying above a key, I think ICT calls these order blocks, right? So your stop is just below, it's whatever, say 7 points, right? So if you're looking at a 1-to-1, you've already made that in spades very quickly. But we're not looking for a 1-to-1 here. Why? Because we just tapped into a key higher time frame objective, and if we fail here, we are going to absolutely destroy everything above us. Now, your personal strategy could be a long to somewhere, say back into the range, which fails, takes you back down, and then you take another long, and you might walk away. You might have 25 points. You guys might want something a little bit more confirmation based to take a swing long with a 15-point stop or something. And you want to hold that 40 points to a larger move, right? Something up in here. I'm sure there's an imbalance or a target based on your guys' system up there that might get touched, right? But in terms of how we study price, we expect strong movement. How many candles is it going to take on our 15-minute chart to leave here typically? Three to four. 3 to 4. That's right. So if we respect this area here, that takes us back down to consolidation, which then we want to see take us back up. And then we'll look for something in here for a higher time frame move. Right now, we don't have a higher time or a confirmation. There we go. Confirmation long. Hi, David. Glad you could make it. Right? We don't have confirmation longs because we've flipped order flow on a lower time frame, but our higher time frame needs to kick into gear to give us that alignment. What I mean by alignment is that we see our higher time frames bullish. If this pullback is going to fail to continue higher, we're expecting a change in order flow on our 15-minute chart, which is then going to send us on a rocket ship. Now we have some very tasty bears for for lunch. We've got an hour till open. We haven't even hit open yet. Okay, so unwillingness to go higher so far. What's very safe to say we're going to build in here somewhere. Might not be here specifically. It could be a larger area. If we go sideways, liquidate, come back in, and then go up, we're creating an SNDR here that then breaks our sharp downtrend or our intermediate time frame downtrend. Okay. This is where we need to actually take into account what structure needs to do to give us our move. Very rarely will I trade before 8:30. The majority of my trades happen at just after open, probably from 9:30 to 10:15, I'd say. I like volatility. Volatility gives us our sweeps and our structure. Cool. Okay, so if we're long, we get 7.25. Let's mark that out too. Why not? Plus 7.25. Right, so a long here would take you above here, equal highs. That could be our longer term play. We want to see if we get some sort of price action continuation up here. Sitting pretty, right? We don't want this to be really respected. Ooh, that was close. Okay. So we took this, we took the high of here. If you're looking for a longer move, your stop ideally is either here or break even. The key is that we're not getting long in the middle of this. We're taking movements down. Failure, we want to be on this side of the curve. We're looking for failure up here that then sends us lower because we're expecting consolidation within this range until we start really moving up. Okay, cool. Stops now here. Stops now here. Oh, out. Cool. Right, so tapping back into here. We can look for another long, possibly. But this area we're now deeming as being very important. So even if we leave here, ideally we'd want to trade back into here and go. Ideally. That obviously doesn't always happen, but it would certainly be nice if we got a double bottom in here at this SNDR that we've created. Oop. Okay, so we've swept this consolidation here. Mark that out. That'll be an area you would consider for another long to take you above this high. There goes that high. And continuing on. Cool. Whereabouts is our target? Right? Where are we long to right now? Are we long to this high? We're at target. Cool. Recall that we had this area here. We can refine it down probably to this. Get rid of that now. Right? This would definitely be an area of interest. Imbalance of 50%. Cool. Why is it important to have upside targets? Because if we see something respected here, we know we're going to trade back down. Right? You guys might just want to go, well, I'm just going to trail my lower time frame lows. Cool. Right? But when what ends up happening there is this low is 72.50. This high was 78.75. That's an extra 6 points of an area you're looking for possible failure. Right? So you're looking at where would I look to short from? Doesn't mean you take the short, but if there's a viable short area, then that's also a viable place to sell your long position. Bang, right back down to here. Right? So possible area coming in here takes you back up. Ooh. Dangerous. Anybody long? Or are we expecting lower? This is a scalper's paradise here, isn't it? Because if you're long, your 1 minute's failed a key point of interest. We've obviously tapped into consolidation. You've got this area here. These no gap candles, put it there. Right? So this would be an area you'd be expecting to take your long to. Failure here means we're going lower. Liquidating it means we're going higher. Oop. Still long? I'll turn that off just so you guys can kind of see why I put it there. Cool. Ooh. Consider short. What's your short objective? Right? What's been taken for you to go short? We just manipulated long. But you need an objective to trade lower. Now, in fairness, we've got this. Okay. For me to look short here, I would need to see some sort of a, I mean, first off, we've got, I suppose we actually took that. So this is a valid high. So closure above here would give us a 1 minute swing. Failure at this protected high would then take us lower. That would be what I would need to see. I would need to see some sort of failure above to take a short here. Now you'll probably make money, especially if you get, but I would, if we get failure in here for sure, but your target would probably be this low. I wouldn't necessarily be looking for us to trade back down into this anymore. Okay. Made some money. Still hasn't tapped to your halfway point, but I'd be very cautious. Oop, can it do it? Immediately back in. You're now looking at this high here, as we're seeing failure to go lower here. Right? Oh, there's your 50%. Now give me my high. Thank you very much. How much easier is that long there than this short here? Just out of curiosity. Right? Now, we didn't get a sweep, so I'm not looking short here. But there's a very strong possibility we tap back in again. If we fail here. Which, weird. Weird how the market moves, right? Now what you want, well, if you're long, you don't want to see a closure below this bar. And again, these, take this off. Right? We are chopping around before 8:30 or 9:30, sorry. Okay, so back into the range, cool. Are we looking at this low here being taken or swept? Let's get rid of some of this. It's a strong low, isn't it? Right? Now, I think switching to a 15-minute chart might mess all this up. Right? But quite often what you guys see is you'll see a body closure into here on a 1 minute, which ends up being a wick on the 15. Right? Now, this is where you have to kind of take into account what you're expecting. There's a very strong possibility of tapping into here and just leaving, which would be cool, right? That would make it easy. But we know the market doesn't make it easy, does it? We've got this area here that we've tapped into and left. We've got lows here that haven't been swept. If we're looking long, we're not looking long up in here for our barbecue. Right? This movement here, that movement here. I'm going to mark that out. Right? So we don't want to see this area here taken. Right? This was our consolidation, which broke above here. Tap back in, left. We might expect a higher time frame double bottom from this area. And what that would do is it would actually break this low. And I'm not concerned about a body closure on this low. I'm actually concerned about a body closure below this area here. So what we're anticipating right now is, again, our job as traders, it's not to make money. That's the desired outcome. Our job as traders is to manage the risk and the amount of capital that we've been allocated. Whether that's prop, whether that's your own money, whatever. Okay? So we're always looking at if then I'm gone, if then I'm in. Where am I wrong? Right? So let's see what the market brings us leading up to open. And then we'll play for another half hour or so. Okay. So charging down, we might get a movement out of this. We'll see. I don't like how this is, but we'll see. Okay, we want to see a body closure above here. Okay, there's your body closure below this low that we were just talking about. So if you're trading based off of market structure alone on the 1 minute chart, you would be looking for a tap back in and then a short, wouldn't you? We're looking at this area here. Did it take this? Nope, did not. Okay, cool. What's this going to end up being on a 15-minute chart if we consolidate or continue up? It's going to be a wick, isn't it? So there's your manipulation here. Ooh. Took and failed. Interesting. Okay, where are we going? Took us right back down to here, this manipulation leg. Let's get rid of some of this stuff. Little fractal there, but we're actually not looking at that, are we? We're basically looking at this manipulation leg. Right? Those of you that love your imbalances, you're now taking an imbalance entry at the manipulation. Possibly. This is a weak low. Possibly. You still short? Let's actually replay this bar. Okay, so traded down, closed here. Traded up, down, closed here. Okay. We're looking for the low. Okay. Okay. Where do you not want to see this trade above? Assuming you're not short from in here. Those of you guys that are looking for this low to get taken. By the way, is this a very conservative A+ type short that you want to take? We haven't really got to tap back into anything. Right? We got to spike up, a failure, and then we've just grinded lower. Yeah, above here, fair. Not happy so far. Right? You want to treat these manipulation legs as lower time frame objectives, similarly to what you look at for SNDR. We didn't get a change in order flow in here at all. There might have been one on a lower time frame for a small scalp on the failure, sure. But we're looking long. We are looking long. There's your 930 candle. That's a nice sweep. Now where are we going? Where would be the most amount of pain right now? We very well could take this low. But absolutely we're taking this. Okay. Wow. I love trading. I love trading. You guys might have gotten paid 10, 15 points if. Right? But if we trade above here, we are gone. At a minimum to this area. At a minimum. Right? Because the market's now tapped back into where? We've now got a double bottom here. Clear strength. That means we are not looking to short anything, period, at all, if we go above here. Right? It means all shorts are no longer confirmation shorts at all, even on failure, because we're expecting this thing to take off. What do we got? Okay. Anybody short? You better not. Because it will try its very best to seduce you into shorts. Let's move some of these over. We've taken one of them. We've got two on deck. There's three. God. Let's take the midpoint of this. 129. There's four. Right? Bias. The weight of this day hangs on this consolidation here. We don't break it. We are bullish for the day. Period. Now, anybody short? Right? We've taken the high of a structural high. Is it reasonable to suggest the market to trade lower? Yep, there is possibility. I mean, this is where we get wrecked going long expecting the moon. Right? The market's taken something and traded back into the range. That doesn't mean we go long here. It also doesn't mean we go short here. There's a possibility of trading back into here and making money. But that's not where our high probability trades are. Our high probability trade is the pullback, the change in order flow, and then getting long for the quick and easy 20-point rocket ship. Because we still haven't touched our mitigation point. Now the easy long is over. So we could long here with a target of the high and we're looking for 10 points or something. Right? But it's equally feasible to suggest, let's get rid of some of these drawings, right? We've got this 930 high here, which is our big range here. Quite often, we trade back into it. Right? I think there was a couple of days last week that we traded back into it. And what that does is it gives you, okay, this might trade lower 60% of the time. We can take a short, which then leads us back in. Cool. Right? But if you're growing accounts, it's much better to be looking for a possible long out of here. Right? There's your first imbalance. Not what we want to see. You want to see tap in and gone. I'm looking at volume responsible. So this low, my goodness, this low was responsible for rocket ship. This high put that in. So yeah, we've got a fractal here, we got a fractal here, we got a fractal here. Right? You could probably refine down this zone here to this. Right? I'm not really sure what Chuck would draw out of this, right? This is the way I trade. So we've got, let's actually refine that down a little bit. We got this here. Mark that. We'll mark that a different color. What do you guys like? We like orange. Look at all the pretty colors. Okay, tapping into this high, did we? We did not. One tick. One tick. We waiting or we long? We got like 5 people chatting and about 70 people in here. We do need lower. That's our wish list. Right? We've got this low here. If we fail this low, that's major confluence to go high. So, I mean, our wish list of our A++ would be a sweep of here into there, closure here, and we're buying a house. What do we get? Okay, so body closure. We tap back in, though. Cool. Signals some, at least a little bit lower at a minimum. We've got our area here, which is awesome. Again, A++, we're looking for the SNDR within. Okay. We've got a small little imbalance in there. Okay. So when we're talking inducement, we've got sharp movement sideways. We're looking at this low possibly. And if we fail to put that in, then trade higher, that's a major sign of strength. We still short? Anybody long? Okay. What's every higher time frame participant waiting for? The hedge funds, the guys that have all of our monthly profits combined as their stop loss. What are they looking for? Right? They're waiting for the market to tell them it's not going lower anymore to now go higher. Do we sweep the fractal? No. No. This is bye-bye. Right? What do we have on the way down? Right? Why were we so bullish today? We had a high, a high, a high, a high, a high. Finally swept something, traded back in and left. Right? That's our 15-minute or higher time frame. What happens on one time frame happens on every time frame. A high, a high, a high, a high, a high. What happens if we go higher? How violent is it going to be? Which, by the way, if you do not get a violent move, that means the opposite is happening and you're gone. Right? Okay. Nice little trade back into here. Trade it back down. We're not terribly concerned about this pullback. It's not what we want to see, of course. Oops. Right? We're looking at this high here. But you have to understand the manipulation. And if it takes you out break even and you're looking for a swing, then it takes you out break even. Right? But if the market starts going from here, then it's going to go violently. Right? This hasn't taken everything we're looking at. It very well could trade back into here and then go. We don't want it to come back into here. That invalidates our idea. Why? Because we're expecting a barbecue. Right? Let's see what this gives us. Here's your first imbalance. It's also a cheat code entry. Right? We've got a strong trend. What have we got here? We got our 50%, which is why we're taking a little bit of movement here. But with the benefit of hindsight, this ideally should be something similar to this. See ya. Just a casual 30-point rocket ship. And there's your 60 points from here. Cool. Now, who's fighting for 10, 15 points here? When your higher time frame is bullish, your intermediate time frame flipped bullish in here. All you're looking for is your lower time frame to now flip bullish as well. Now you got your trifecta. Can you tell why the price rocketed before keeping a closure above the last down candle in the pullback? You're talking about like when it sold off here? What's this? That's the fractal that broke this uptrend. Tapped into it, gave us a small little bit of a reaction to it. Traded back down to this candle here. And went on a rocket ship. Right? So this was the area that they were buying. We manipulated it, traded above it, traded back in, left. Right? But we're concerned, our concern would be trading below here. We want it to respect and close above this. Now, the midpoint of that is quite often very powerful. What we want to see are we going to get a reaction out of here, right? We had strong sell-off, a low, right? This was a fractal that sent us higher very quickly. We don't get a reaction in here. We might get it in here. We might even get it down here on a wick. But we expect some sort of bullish price action here. Not to mention, we look to the left, we have a key unmitigated zone. Right? We're expecting a pullback because of taking a structural high. But we're bullish. We're bullish because of this consolidation here. So we're looking for longs at some point. Right? We allow price to tell us that we don't want to go lower. And there's little tips and tricks, obviously, when you're looking for continuation. We might not always get a 30-point rocket ship off of an imbalance, right? Especially at a key point of interest. But at the very least, those of you that are contrarian and you see some sort of sweep that trades into an imbalance, like this is like danger zone for me. I don't short into the things like this, regardless if it gives me 10 points or not. Why? Because look what happened after we traded into that imbalance and respected it. I don't want to be on this side of it. I want to be here. I don't want to be trying to take this. We don't know how high it's going to go. Hey, Chuck. Right? Trading into this fractal. Cool. Happy Father's Day. Okay. Trading high. Yeah. Cool. If you're looking long, where are you looking long from? You've got two targets. You've got this. And you've got the open of a 945 candle here. So we've actually got an imbalance in here as well. Right? I'll actually just mark this low. Now, typically, I don't take imbalances. Well, I don't take imbalances at all. But I look at the immediate candle after an imbalance. So it very well could tap into here and go. But I put additional weight on it when the candle right afterwards taps in. So we'll see what we get. Ooh. Anybody long? Okay. What did that big bear candle achieve? Tap back in to go short. My goodness. We are up 100 points. Whoop. If we're going to pull back at all, we're expecting a range environment minimum. If we're going to trade lower into here, the market is going to scream at you that it wants to go lower. And you will see something much more prevalent than this. Your last structural bullish candle is here. So you want at a minimum a close below there to even consider a tap back in and then shorting. We're going above this high right now. There it goes. Okay. So failure here takes you below here. Might tap into here. That would be pretty cool if we swept this candle lower and then we went long from there. The challenging part about these days is that no, it's not. You have a range here. Right? So your smaller time frame range, we're shorting the top of it. Not in this situation. Why? We're screaming bullish. Right? But we're definitely looking for longs at the bottom of it on failure. On failure. We are staying out of anywhere in here. No thank you. Because if you're long here, you're expecting us to take this high. If you're short here, you're expecting to break lows. Right? We don't have that ability. You guys have to let control of outcome not be part of your trading process. Your job is to manage risk. Right? And what that means in your evolution as a trader is that you very well could short here and make money. But you want to be able to do that consistently for a long period of time. Right? We don't want to just be trading well for a week. You want systematic trading. Eliminate as much discretion as you can, so that your process becomes repeatable. People talk about discretionary trading being the epitome. And essentially what that is you're actually looking at systematic decision making. If this, then I short. And you can say, oh, it's discretionary because I'm shorting in here rather than waiting for something. Well, you're still seeing something repeating over and over and over again. Right? Now I'm expecting lower prices. I'm not shorting. I'm looking at this low. I'm looking at here. Probably tap back into this range at 46.25. There's your range. Closed right at the top of it. No, it didn't. I marked that zone not properly. Cool. Okay, dangerous. Dangerous. Probably just going to go now. If it doesn't give us an entry, then it doesn't give us an entry. That's a nice little sweep, but not on the time frame that we're watching. There's your tap back in, right? Tap back into this area here and failed. Right? So if we're not long from here, say you're long, I don't know, you're now looking at a stop below here, and we're targeting the high. I'm just using a somewhere conservative, right? We want to be long in the bottom third of the range after this gets respected. We'll see if we get correct. Okay, well, now I look like a fool taking 20 points on a 50-point move. Amazing. Right? But the key part of this that you want to repeat again and again and again, right, is you're looking at where am I expecting the lower time frame to trade into, and are we failing there or not? This might not be a trade you take. This might be, I want this low and this imbalance tapped into and respected immediately. Right? And now you're looking at this weak bear bar that came in, and you're buying and you're putting your stop below it. And you might have a whatever win rate with that. You guys might like... I don't know, something else. You might be long in here regardless on that close, and you want to have a wider stop. Cool. Right? This is the way I trade, where I'm looking for objective-based trading, where if this taps back into somewhere specific and I get a reaction, then I'm long. Because it's completed its objective, and if we're all done with our downside objectives, then away we go. Now, this obviously doesn't happen all the time, does it? So let's see what we get. Right? We could tap back into this range. We'll see. We're certainly sweeping the top. No imbalanced tops. Little consolidation coming in. Cute. Ooh. Anybody long? Or is it too high for everybody? Okay. As you guys grow as traders, you learn to develop more awareness of your trading personality, and the purpose of that is to stay out of trouble, right? So some of you guys might be scalpers and you thrive on ranges. Some of you might be continuation traders and you thrive on days like this, and then you walk, right? I mean, like 50 points here, you grab a 50-point trade or even half of it, You know, that's life changing. I think we can all agree, right? I see a lot of issue where people run into wanting to short the move back down, short the move back down, because we think it's too high. But what that is getting married to a bias and not allowing price to dictate for you what's going on. Right? So, for example, what happened in here that we took a long, and look how well that worked. That happens quite often. So what's the objective of this here? Right? We have consolidation here. So failure takes you back immediately to consolidation. If this comes up here and we fail, then we can anticipate a move back down. Right? We just broke below here. Right? But as it stands right now, we just hit our first speed bump. So everybody who was short from in here traded into this consolidation, which led to expansion. This should, at a minimum, trade back up here. That doesn't mean you're involved. You have very specific rules of where you get involved in. But for me, seeing something like this is my scalp. Right? Now, I'd like it above here, or I'm gone. Right? But my stop's probably below this low. Cool. Right? I mean, we're quite happy. This is probably going to end up being a longer move now because we're now failing to go lower. Right? We do have a valid high. This was our last structural bull bar, which got a close below here. We just now have a valid low put in. That tells me we're going above here. But I have to be prepared if I'm going long in here that the possibility is we trade back up into consolidation, we sweep this candle's high, and then we trade lower. Right? This candle would probably be a target for liquidity. But if we're so strong that we can't do that, the market's going to leave signatures. Thank you very much. Right? But stay out of trouble shorting. Because away we go. Right? First imbalance. Put in a new high. Cool. Right? Couple of inside bars. So let's speed this up a little bit. And then maybe we'll have a look at what exactly we would want to need to look short, because this is just monster. So those of you that are in deplorables, all trends end in what? Exhaustion. Exhaustion. Right? So, climax, which then gives you uncertainty when it pulls back in. Uncertainty leads to consolidation. Right? But you'll typically see that on your lower time frame first, which leads you to consolidation, if it's going to be here. Right? We haven't really seen climactic action yet. But there's the possibility of, well, let's see what ends up happening here. Right? This is just rocketing up. So let's see if we get some consolidation at some point. right? So inside bar leading to expansion. Okay. What's that screaming at you? Right? That doesn't mean we're looking to short up here for whatever, right? And the only reason that I'm actually looking for some sort of a pullback is actually because we're up, 300 points from this move. That doesn't mean that we short at 300 points, but we're starting to get to our average true range. So we've got this area here, which we just took out. We don't have any swings in here. Our last swing is still all the way down here. So speed bump here. Maybe something there, but that's already been mitigated. We'll see what we get. Tap back in. We long or short? If you're long, where's your first target? Or are we looking for a retracement to get short again? What did we just learn? If we're going to go lower, we're probably tapping into this, which then takes us lower. I don't like that we didn't tap into it immediately, but it's a possibility. Inside bar. Right, this is going to lead to expansion one way or the other. There's your imbalance, right? Which also, I think this is called something in you ICT bros. Okay. That take it. Cool. Right? Now, we've got a speed bump here. Let's get rid of this. Right? This was the low that put in the high that delivered us a sharp move down. Possible that we trade back into it. If we get a reaction from it, we want to be out of longs. If we don't get a reaction from it, then this is just a large block and we just go on a rocket show. Okay. Now, if we're in a range, which it looks like we are, we've got a valid high, right? We now have a valid low, which tells us we're in a range. This should trade back into consolidation. We'll see what we get. Right? But you're looking at failure. Okay, so spiking lower, cool. Ooh, tapped into an imbalance. Let's see what happens. We long or short? Biased, whether we're involved or not. What are you looking for to get long? What are you looking for short? right? Okay. Did this trade into our range here? It did not. Weak low for short. We just took it. Short since we closed below. Okay. 50% for short. Okay. So people are looking at this. Okay. When would you not want to look at the 50%? How interesting is it that everybody's got different opinions? Did we get failure above? Ranges, correct. Ranges is correct, right? So we're not actually looking at this. That tap in is the long, okay? Consolidation occurs when you have uncertainty. How certain are longs after seeing a bar like this? Right? So if you're long, are you more inclined after seeing this to take profits quickly? Right? You see something like this. Are you looking to be afraid when it comes close to the high to take profits? Probably not. You see a 26-point dagger that closed on its low. Makes you a little bit more cautious in your hard-earned money. What are you looking for to get long if? Or are we still looking short from in here? We'll go for another 5 minutes. Right? So you're looking, okay, say you miss this, along with however many other millions of people. Sweep and short. Sweep short what? Sweep this in short? You're still looking short, my friend. Quick short scalp after it taps that high. Everybody looking short. My goodness. That's a good interesting bar for you guys. There's your consolidation top. Okay, well, hindsight now, but tap back into consolidation and left. Definitely targeting this high right now. Okay, well, that was quick. You guys shorting on this failure? That's a beautiful little move. In for a 3-point short. 40-point range. Bias is short after the sweep. Okay. Where are you holding to? We want this taken. For those of you guys that are got the fortitude of Hercules. This is danger zone. This is danger zone. Whoop. Whoop. You still short? Whoop. Whoop. Ah. Right? Possibly tap back in now. My goodness. What did we learn? Right? We're not shorting here. We're not going long in here. We trade the failure to go lower after we've already failed the low. Right? This didn't actually give us a short opportunity in here. I can understand the short coming out of here based off of what we're seeing to the left. But I need failure to get involved. If this trades up, fails spectacularly, then cool. We can target here, possibly the lows that are now weak. But zoom out, lads. Zoom out. What's the easy money telling you? Is it long or short? Don't look back on your review at 4:30 p.m. and go, why was I shorting all day today? Right? Do that during the day. Look for failure. Trust the failure. If you don't get failure, nothing's taken, then fine. But you'll find that even if you're on the wrong side and you're in the right spot, you can actually make money. But it's a hell of a lot easier to be right in the right spot on the right side, isn't it? You know, we get into a habit of saying it can't go up anymore. So we just had another consolidation. If this doesn't fail pretty much immediately, we're going higher. A lot of people in 2020 or 2008 lost everything. Why? Because the market's never wrong. Our opinions about it often are, as the famous Livermore said. So let's play this forward and see just how wrong the shorts were. If. Oop, made a little bit of money. This is your range, right? So only up another 70 points. Casual. So we're going to call it here, guys. Hopefully you guys took something out of this. Thank you all for attending, especially on Father's Day. And if you're looking to level up your narrative, consider joining our fun little group. There's a link in our description. This is basically what we do and we walk through on a daily basis. So hope to see you guys around. And if not, we'll have another community stream in July for sure. You guys take care.